Good afternoon, ladies and gentlemen. Recently, Sezzle and ZipPay have mutually agreed to terminate a proposed merger, leading ZipPay to pay Sezzle US $11 million in order to cover things like their legal fees, accounting, and other costs associated with the transaction. Now, $11 million sounds like a lot, given that the market cap as of today is sitting around $50 million, which is a massive decline from the recent $2.2 billion highs at around February last year. Now, the BNPL sector has stonked, and you can see back in 2020 and 2021 how much sentiment was priced into the actual valuation of the company. Not too much has actually changed back before the COVID boom, so when it was sitting around $1 to today's price around 22 cents. We're going to see that the financials actually don't justify this kind of price action and move. So anyone who is considering long-term investing might get a better idea of what to look at in the financials to determine whether a company is potentially overvalued or not. We're going to take a look at the potential value of the company today as well as it stands. So we're going to take a look at the fundamentals and the technicals of this company. And to keep it real brief on the technical side of things, there's really nothing technically. It's just a straight murder scene, and just vertically to the downside. No bounces whatsoever, which just tells you how horrifying the data must really be in order for a company to just look like this on the charts with zero bounce potential whatsoever. There's probably a key level here that I bounced off at one point, did a little bit of a hop there, but ultimately has come back down to reality. Gravity's kicked in, and we're going to dive into the fundamentals that led this stock to where it is today. And you can see the impact of the merger. The last couple of days, it's just been getting murdered as well. So some saw Sezzle's takeover or its acquisition as a saving grace of sorts. But now that that's been cancelled, $11 million payout on a company that's 50 mil market cap, that's a pretty significant amount of money. But let's take a look at the financials a little bit more in depth. So we've got the current financial quarter on the right-hand side and the previous quarter on the left. We're going to pay attention to the current quarter columns. And we can see the revenues have been in decline from $503 million to $450 million. Even though they're operating at more of a profit than they were before, they were running at a just under $41 million loss. They're now operating at a $7.8 million profit. But that's just when you take revenues minus costs of goods sold and plus all the interest, any sort of tax fees and any sort of advertising and marketing components that go with the business as well. So operating at a profit for a change. And if we scroll a little bit further down, we can see that while they're operating at 7.8 million positive, they're running at a negative when it comes to financing activities. So of course they have repayments for borrowings as well. Whereas previously they ran at a net profit at 73 million. So it's just a bit of a flip between operating and financing for this quarter compared to last quarter. Ultimately, it's running at a loss. So we went from just under $79 million in cash equivalents down to $60.5 million. So running at about a $19 million loss between the quarters. So the financials aren't particularly healthy. And we can see here, this is from ticker.com. It's what I use to rely on financials, so things that just kind of automate the process for financials and financial reporting. And what we can see here is the increase in revenues, increase in gross profit up until the first quarter of the calendar year in 2021. And that's where things just leveled off. Revenues kind of went stagnant, slightly up, but nothing significant at all, especially to justify market cap pump from 100 million to 2 billion. There's just nothing here financially that makes sense for that move. And we can see gross profit has just been stagnant, a little bit of a spike, but also a decrease in EBITDA. So whatever gross profit was there must have been extra repayments or just more spending, and ultimately just ended up with a terrible EBITDA position. And you can see it's just effectively stagnant, and any sort of pops in gross profit just gets negated by the fact that there's negative EBITDA. So we also end up with a equity position, which is assets in green, liabilities in orange, and equity in this sort of blue-purple color. So assets minus liabilities gives you total equity. And we can see the equity position has kind of stayed stagnant, which isn't very particularly healthy. I mean, for a stock that's been booming multiple X, and going down from 60 mil down to 12 mil, yeah, equity position looks terrible for Sezzle. And one has to ask the question, well, why was the company ever 2 billion market cap? You look at these financials, you look at the equity position of the company, and then you look back at the chart and you ask the question, how did this happen? A lot of this was sentiment driven by Afterpay, which was very successful, and then ZipPay, which was a close second, and that was successful up until a point. And then Sezzle and OpenPay and these other companies kind of just ran off the back of it. It was all price action, momentum, and sentiment. And you can see just how much of this company is or was based on sentiment. I mean, the thing ran to $12, right? All this, completely unnecessary. From a financial perspective, when you look at the fundamentals, this doesn't make sense on any metric, anywhere, given the numbers they pull in for every quarter. So that doesn't mean that the stock is not worth holding, because the market is irrational far longer than any of us can remain solvent. So there's a lot of price action and momentum that goes into it. And then it sort of ends up ranging in a very large range, mind you, as well. And then reality kicks in when the entire sector just goes, well, we haven't moved. Financially, we haven't moved. None of the financial metrics have gone into positive, right? This is one of those stocks that was considered a growth stock. And you can see why it was considered a growth stock, right? It was trending to the upside, both in equity at halfway anyway, and with earnings and revenue. It was looking like it was growing and had the potential to keep growing. But the reality is it went stagnant and it's even turning negative. So when the market prices in, let's say, at $6 here, that's not pricing in everything for the day. It's pricing in for the future as well. It's anticipating that the stock might be going sideways or potentially has an upside potential to it as well. But instead, what we have is terrible financial reports coming out, then the market realizing that this actually isn't going anywhere. So we went from this point here in equity and in this point here with earnings and revenue and the financial metrics, and it just hasn't gone anywhere. It's stagnated. It's not going like 100% quarter on quarter or half year on half year or year on year. It has got nowhere near the metrics that Afterpay had, which I strongly suggest everyone go back and look at Afterpay's numbers, because everyone was shitting on Afterpay, but it actually had really, really, really good metrics. It was just blowing things out of the water while not running at like a significant loss. And if they were running at a loss, it was because they were spending on advertising and taking over other companies. So in terms of operating profitability, it was perfectly fine. And it was just constantly growing at a significant rate. It was looking parabolic compared to this. This looks like a very slow linear chart in comparison to Afterpay. So there was a lot of hype in that sector, and it's now gone. The market is just going, this is what it's worth. It's not only pricing in today. Keep in mind, it's not pricing in the equity for today and the financials of today. It's pricing in the financials of next quarter, right? Because we have an equity position of around, well, we've got 60 million cash. Let's put it that way, right? We just saw on the financials here, it's sitting at 60 mil USD in cash, but the market cap is 50 million Aussie dollars. So clearly, anyone that buys this stock right now is getting a higher cash balance than the current share price and the market cap, right? So you're buying at 50 mil and you're getting roughly 70 mil Aussie in cash. But that doesn't matter, because while it's trading below its cash balance, the market is pricing that cash balance is going to be reduced next quarter anyway. Hence why it's trading at 50 mil market cap, because the market's anticipating that it's going to be losing more money next quarter. So it doesn't matter that you're trading below the cash backing, because there's going to be less cash for the next quarter, if that makes sense. So I don't see a single metric with either technicals or fundamentals that suggests Sezzle has any hope in hell of recovering. It is worth watching the next financial report that's coming out, which should be in the next few weeks. And look, if the numbers reverse, and you can compare the new financials with the existing ones, and if the metrics are healthier and getting better to the upside, the stock could very well swing. But I don't see a point in myself risking my capital on a stock that shows no sign whatsoever of recovering. Financially, I don't see anything positive here. But if EBITDA goes up, revenue spikes to the upside, and gross profit spikes all together, all three of those metrics spike to the upside, then there's signs of life. And then, and only then, would this stock likely recover, because then we'll be back in an uptrend. The market would no longer be pricing a downwards move, it'll be pricing an upwards move in the future, which would cause a sort of a knee-jerk reaction. So the market pricing in negativity would start pricing in positivity. So there'd be a nice little swing to the upside. But I don't see any signs of Sezzle actually doing that. Until that financial report comes out, until it shows signs of life, this stock, in my opinion, is probably where it should be. But do keep in mind, I'm not a financial advisor, and this is not financial advice. I'm not recommending you to buy, sell, or do anything with Sezzle. It's just my opinion for education and entertainment purposes only. If you guys learned anything at all, please do consider hitting that like button. I'd appreciate that. Otherwise, leave a comment and tell me what you think about the stock.